Hi friends, today we are going to learn Accounting Standard 19 on leases. So what is the context of the standard? We will take one interesting case study to understand that. There was a UK based company called Courtline Limited. Now this company was into the business of air travel. So basically it traveled or it transported customers from one place to the other on an aircraft. So that was basically the business, pretty much like what maybe Jet Airways or Indigo does in India, right? Now, what exactly happened in that company is it had shareholders funds of about 18 million pounds. What would you expect to see on the asset side when the company is into the business of kind of moving customers from one place to the other on aircrafts? You would expect on the asset side the company to have aircraft, right? But interestingly, the company did not have even a single aircraft on the asset side. That's surprising because the company actually took all the aircrafts on lease. It never owned any of those aircrafts. It just took aircrafts on lease, and those aircrafts were used to move the passengers from one place to the other. So that was what was happening. There came a point when this company, Courtline, could not pay lease obligations to the lessor company from whom they took that aircraft, and as a result that company which gave aircrafts on lease filed a case against Courtline, and the amount was for more than double of the shareholders funds of Courtline Limited. You know what has happened after that? Courtline Limited applied for insolvency and it was wound up. It became bankrupt because the company did not have enough funds to pay so much money for that aircraft leasing company. So at that point in time, people realized, oh my God, even though the transaction looked like lease, it doesn't seem like lease. If it is lease, you should ask only for lease rental. But that company asked not just for lease rental. The aircraft leasing company asked for the value of aircraft based on the agreement. So when such an obligation was enforceable, suddenly everybody realized, oh my God, even in the auditor's report, there was no mention about this. Auditors also gave a clean report. So auditor's report also did not have any mention about this. And suddenly that company became insolvent and it was wound up. So that was when that point regarding leases and how complicated the leasing business is getting kind of came to the light. And today, Accounting Standard 19, what we are learning, has a lot of relevance because increasingly companies are using leasing transactions for different aspects. It could be leasing of premises, it could be leasing of equipment, or leasing any rights on assets. So like this, there are different aspects on which the companies are using leases. So it's a fascinating standard that we are starting now, and let's move into a few definitions before we take on the other aspects of standard. The first point is about what a lease is, right? So let's take a small example. The one who gives asset on lease is called lessor. L-E-S-S-O-R. Lessor is the one who gives asset on lease. Lessee is the one who takes asset on lease. Somebody is giving the asset on lease, somebody is taking the asset on lease. Okay, there is a lessor and there is a lessee, right? Lessor gives the asset to lessee. Lessee, in return for the asset whatever is taken, lessee will pay money to lessor, right? So lessor gave asset and lessee gave money to lessor. So technically, in whose balance sheet should you have that asset? You should have that asset in the balance sheet of lessor, right? Who should charge depreciation? Lessor should charge depreciation. And for giving the right to use the asset, lessor should get money, right? Lessee pays money, lessor should receive money. And for lessor, that is an income which should be credited to P&L. Depreciation is an expense which should be debited to P&L. Asset will be shown in the balance sheet of lessor. That is what should ideally happen. And what should happen to lessee? In the books of lessee, if this transaction is very straightforward, lessee should say, hey, I took the asset on lease, but it is not my asset. It is somebody's asset. even I'm just using that asset. So lessee should book lease expense, right? So it is something like rent expense, and that rent expense should be debited to P&L of lessee. So it should be something like lease expense to lease payable to cash or bank, right? So finally lease payment is paid off, and net impact is lease expense to cash or bank. That is the net effect what lessee should have. So that lease expense should go into P&L of lessee. So this kind of a transaction is the most obvious, most logical thing that we would have done when you hear that word lease, because when we say lease, we don't hear that as sale, we just hear that as something called as lease, where the one who is a lessor, we feel, still owns the asset even though asset is used by lessee. Friends, if really leases were as simple as this, trust me, all of us wouldn't have had anything to read in Accounting Standard 19. Accounting Standard 19 itself wouldn't have been there, because this is so logical. Done. This is all you should have done. But the reality is, people like Courtline Limited started buying assets in the name of lease. So it's not lease anymore. The cover, the external legal face is that of lease. But if you look at, hey, what is the real substance of the transaction? That substance of transactions looks like sale, or basically they bought the asset, but they're just telling the they're telling the shareholders or other members or creditors and other users, hey, we just took the asset on lease. But reality is different from legality. Accounting is based on reality, not just legality. That is why Accounting Standard 19 is based on the fundamental principle that we should understand the substance of transaction over its legal form. Substance of transaction over its legal form. So that is one of the most important points in the accounting standard. And then you will have obviously something like matching concept. We are going to see how matching concept will be applied during this accounting standard, right?